The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here with you, but mostly I treasure your presence, and my outcome today, folks, is to help you to become a better money master, but mostly always to provide you with the tools that will help you to lead an inspired life, because leading an inspired life, folks, that is what it is all about in life. So let's go take a look at one of those tools. This is the tool that I call self-preparation, and there is no better day to be able to have self-preparation, folks. And self-preparation, it's simple. It is a discipline that has two benefits, two real big benefits. The first is that it moves you towards your goals. Yesterday I talked about outcomes. Did you write a couple of outcomes down? In fact, one outcome for each area of your life. One outcome when it comes to your health, one outcome when it comes to your wealth, one outcome when it comes to your relationships. Just identify those outcomes and do something each day to move you towards those goals, folks. That is a discipline. It's all about self-preparation. The second thing, folks, and here's where you get real clarity, and that is just simply that you know what it is that you want to do, and you will absolutely move forward. That second benefit, folks, it refuels your mission out there. Folks, the things that you are doing today are getting you to where you want to be tomorrow. If you don't know your outcome, you're just kind of like one of these doji candles. It's kind of the halfway move, and you're not sure if you're going up or down. You don't want to do that out there, folks. Self-preparation. 3 steps. Just as 3-step process. Just go ahead and write this down on a pad of paper. The first step, we're going to certainly take a look at this as we take a look at the markets here. Consider your next opportunity. Yesterday's markets were great for both bulls and bears. We're going to go out there and we're going to take a look at the next opportunity to both sides of the trade out here. That's your first step. Consider your next opportunity, no matter what it is that you're doing. Number 2, make sure that you know what it is that you need. Make sure you know what it is that you need to take advantage of that. Maybe some of the information I might share with you, maybe it sounds foreign to you. Well, maybe you need some more education. Could be books, could be courses, could be newsletters. Make sure that you know what it is that you need in order to be able to take that next step in life. And then number 3, do all that you can do for each opportunity, because when you do that, folks, it is more likely to happen out there. That, folks, is all about self-preparation. Remember, and this is real key, folks, it's in your moments of decision that your destiny is absolutely shaped out here. So let's go take a look at the destiny of the markets here right now. You've got the futures trading off. You've got the Dow futures trading off about 35 points. ES Mini down at 1407.75. That's what we're taking a look at on my screen out here. Of course, I'd like to pop up there, because we haven't done that in a while here, is my favorite spot on the planet. Before you start with your self-preparation, make sure you take yourself to a place of strength out here. My place of strength right there, that big rock at the island of Lanai. If you ever are fortunate enough, folks, to be over in Hawaii, if you make the trip all the way over there, no matter where you're coming from, make sure you go over to Lanai. Folks, it is just simply, it'll feel like your own private island. It is your own private island out there. Make sure you go over there and make sure you blow Steve's, that beautiful rock out there. Just make sure you blow it a little kiss from me, if you get there before I do next. Now, we're taking a look at our screen here. We're taking a look at the ES Mini. You can follow us along on TigerTV. All you have to do is go to the homepage of TFNN.com, click on the TigerTV button. Maybe you're listening to us on your mobile device because you went to TFNN.mobi. If you haven't done that, make sure you put that on your mobile device out there, and you can always catch an archive of this show on Channel 9. Why? We start at 9 o'clock in the morning, so it becomes very easy for you to remember out here. Right now, what we can see is the first leg of the A to B equals CD down is underway. I do expect that we'll see lower prices today. Maybe today's a low that's being put in here. We're certainly going to take a look at that. Got the NASDAQ futures trading off about 8 points right now. Russell 2000 down a couple of points. King dollar getting crushed yesterday, trying to get back inside its range, trying to get back inside the swing point where it took out that 3 drive to a bottom pattern. Folks, that was not a good move. When you take out that pattern, that says caution, absolutely says caution. King dollar up 15 ticks right now. Gold trading down $1. Gold having a nice move yesterday. Silver having an even better move. Right now, you got silver back about looks like about 9 cents out here. Light sweet crude down 30 cents. If we take a quick peek around the world, then we'll go over and take a look at the ES Mini, take a look at what's going on there. Around the world, you got the DAX trading off 75 points. You've got the FTSE down 72. The Nikkei was off 25 points. The Nikkei actually looked pretty good for being down 25 points last night. Shanghai off 11 points, and the Hang Seng off 212, just a little bit over 1% out there. Our call-in number is always 877-927-6648. Would absolutely love to hear from you, so feel free to give me a call. We can take a look at your stock. So we're taking a look at the 30-minute chart here on the ES Mini, and we take a look at that. You've got your A to B leg. That A to B after the A point was made at 11 o'clock yesterday, up at the highs at 14.2475. Oh, you got to love that. You know, when Tom and I were doing the Money Master show, he was saying his prayers. He was saying, please wait till we got off the air at 11 o'clock so he could go take a look at the markets, and he could sell the markets, and he was able to catch it right up there at those highs there, folks. So the high coming in at 11 o'clock on the ES Mini, 14.2475. That's going to be your A point. Your B point, you could use a couple of them. You could use the cascading waterfall that came down into 230 out at 14.08. My preference here is let's go take a look at the B point down here that came in last night at 10 p.m. That low, 14.09. So now we've got our A to B, and let's go see what that C to D looks like. Let's go ahead and erase the chart here. We can always add our tool, always add our indicators to any chart out here. So what we've got here is this A to B. Now this one, actually, before I do that, before I actually go ahead and draw this, the reason why I'm going to go ahead and use this as the B point, folks, is because right here is where you actually have a bearish candle formation. That bearish candle formation, a morning star. Now the morning star came in late last night at about 10:30, 11 o'clock. So that is this 3 candle pattern. That's the candle on the 30-minute chart at 2200. So that's 10, 10:30, and 11 o'clock. So that's an area there where you should see some support. That area gets taken out. Then what will happen? You will start to see that A to B equals CD unfold. That is why I've chosen that as the B point here. But always remember, folks, you need to be flexible when you are taking a look at any chart pattern that you're putting out there. So our C point out here comes in at 5 o'clock this morning as the ES Mini gets up to a price point of 14.1150. Now, what's the first thing we want to do? You know, if you had your rubber band, it's the same thing as saying Steve's going to go ahead, he's going to see what that retracement level is from that A to that B point. What we can see there, folks, is that retracement level is what? Less than 0.382. 3 retracement levels that you want to make sure that you've got on your ruler out there. 382, 618, and 0.786. You don't want to leave home without it. Of course, you don't want to be charting without it as well. So now we know that we've got some real energy behind that A to B move. We're going to see if there's a similar energy on that C to D leg. What's it going to have to first do? It's going to have to first take out those lows at 14.0650. That's what you're going to want to be watching. Now let's go ahead and let's shorten up this chart here. Let's take a look at the 1-to-1 A to B equals CD. 1-to-1 takes you to what price, folks? 1393. So let's just get 1393. That is the 1-to-1. Now you've only done a 0.382 retracement. The market here, it's been sleeping overnight. And the question is, are the bulls or the bears going to step in? I can tell you on that 30-minute chart exactly where support is. So we're going to be able to find out here real quickly as the market opens up here during the next hour. We're certainly going to see whether this is a line of support. I don't suspect it is because it came about in the late evening yesterday. The 1-to-1 is 1393 on your A to B equals CD. Down more likely, if you break this area, you're looking at looks like about 1388 as the next level on the ES Mini. That is on the 30-minute chart out there. Now, where you're going to find another area here of support, and this is going to be a big heads up. The heads up is take a look at this hammer candle that came in. I'm going to go ahead and blow it up on my screen. This hammer candle is what held the market. The market took off from the low here. That hammer candle came in at 4 p.m. on August the 14th. That low is 1397.25. That's the area where if I'm your pilot, if we're on as the market moves down into that, what am I going to flip on in our airplane? airplane, our jet, our beautiful jet out there. I'm going to put on the fasten seatbelt sign because that is the area where you should see some support. You bust through that, folks, and you bust through that, and what's going to happen here is the ES Mini is going to go ahead and make that 1 to 1.272, at least the 1 to 1.272 A to B equals CD down. That brings in place the 1388. Could also bring in 1382, 1375, and then finally 1363. That would be your 1 to 2.618 A to B equals CD. Now, if you're just taking a look at this chart here on the screen, all you would really do is go from that major low out here, looks like coming in at about 12:30 in the afternoon on August 2nd, out at a price point of about $1353.75. And you would just simply go to the high that was put in yesterday, and what you would take a look at is where are your 382 and 618 retracement areas? Well, you can see that 0.382 level, folks, coming in where? Right where we were looking at that hammer candle. That, folks, which is, again, I'll give you that price number here, that hammer candle low where you got about the 0.382 to 1397. Look at that area. That's a critical area. 877-927-6648. Give us a call, folks. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You know what I love about yesterday's action? It gave the Bulls and the Bears absolutely everything that they needed. I mean, the line has absolutely been drawn in the sand. You couldn't ask for more. There's clarity on both sides. If the resistance levels from yesterday get taken out, I can tell you just simply back up the truck and go long and strong, folks. It is nice to have those resistance areas. Now, the market is always communicating to us. You know, learning foreign languages, I don't know about you, but certainly when I was in school, they forced you to, well, they didn't force you, but, it was going to be better for your college transcripts if you went ahead and learned a second language. So I tried to learn a second language, but I didn't really have a lot of interest in it, and therefore I can't really speak it. Well, the market has its own language, and the language, folks, this has been out here for thousands of years. It's why I take a look at these candles. Candles, folks, are absolutely communicating to you on a continuous basis what the Bulls and Bears are doing, and that's just simply what the market is all about. It's about understanding what the Bulls and the Bears are doing, and it has more meaning as you come into resistance and support levels. Now, everybody that was a technologist could have, that had some technical training, was able to go draw the resistance areas in the markets. Whether you take a look at the futures markets, the indexes, world markets, all the markets were doing the same thing, and they were coming into these resistance areas. That is the wonderful thing about what went on yesterday, because if those areas get taken out, folks, I can tell you that this market wants to motor higher. That's on the bullish side. Right now, resistance has held, and so that's why you want to make sure that you are preparing. And when we take a look at resistance areas, let's start by taking a look here at the DAX. You've got the DAX trading out right now at 7,021. That is off about 72 points right now. Now, if you were jumping to blow this candle up here, this red line here is the resistance area, happens to be the March 27th area. The DAX has got a little bit more resistance. If it tries to bust this out, that happens to be the candle of March 16th. If the DAX gets over 7194.33, back up the truck and go long and strong, but not until then, folks. So it comes up into a resistance area. Now, if I blow this candle up here and you take a look at this specific candle, what does that tell you about the psychology and the sentiment of the market? Isn't that what you always want to do? If you are a person that loves to play poker, let's say maybe you like Texas Hold'em. I learned that game a long time ago. Love that game. Love playing cards. Love playing poker. Now, when you're playing poker, folks, what you're doing is sometimes you're playing against an opponent. You don't know whether they're bluffing or not, right? Well, in candles, they tell you exactly what's going on. They tell you whether there's a bluff going on or whether it's real. Take a look at yesterday's candle and then the prior day. What does it tell you about the psychology of traders? Take a look at it like this. The open, the open yesterday, August 21st, was 7,048.79. What did the DAX do here this morning? It had to gap down. Now, it doesn't look like a gap, does it? It doesn't look like a gap in a traditional sense, but psychology, it had to gap down to yesterday's open. So that's why you want to be paying attention to candles out there. That's actually a very bearish candle formation. That's the beauty of having the line drawn in the sand as you've gotten into these resistance areas. Because if the highs from yesterday, but again, when you take a look at the DAX, it's got one more area of resistance, so you'd really go back to the highs of that shooting star candle for March 16th out there. If those areas get busted, I can tell you the DAX wants to run long and strong. To what levels here? Well, the DAX would go all the way back to its May 2nd, 2011 levels at least. That would be up at 7,600. You're at 7,018 right now. Isn't that a beautiful thing? Now, if we go take a look at our markets, if we go take a look at our indexes, Let's go take a look at the index futures. Let's go back to the ES Mini. The ES Mini up against two areas of resistance. We showed those to you yesterday on the charts. You can, again, catch that archive of that show on Channel 9. Now, as it was getting in there, folks, on this day right here, this session, August 20th, you had a doji candle. Now, that really wasn't telling you a whole lot other than that the market was tired and there was balance between the bulls and the bears. It was really yesterday's candle that went ahead, tried to get up and over that resistance level, did that as we were coming into the 11 o'clock hour, as we took a look at on that 30-minute chart on the ES Mini, and then what did it do? It sold off, and it created a bearish engulfing candle. Bearish engulfing candle, also very bearish, not as big as the the bearish separation line candle we looked at on the DAX, but this also giving you a bearish signal as you were up at the top. That says that this area here of resistance is very strong. That's why I say you get up and over that, folks. Back up the trucks. Go long and strong. I don't know where you should go long and strong, but that is what that is the beauty of what is going out here. So you've heard about languages, you know, and if you go through the airport, you see those stores, Rosetta Stone. Well, I'm Steve Rhodes. This is Rhodes Zeta Stone here at TFNN, 877-927-6648. We get back, we'll go see how these markets are going to drop, whether they're going to pop. We'll take a look at Express Scripts, Apple, which is trading down a bit, Sunrise, Senior, Brookdale, and we'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals. time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 23 points. S&P's down 4. Composite down 9. Small caps lead the charge down 0.35%. Down about 3 points. You got Microsoft pulling back 16 ticks. Intel off 24. Google down 11 cents, up 11 cents right now. Cisco off 6 pennies. Apple down $5 and change. If we take a look at what is popping and what is dropping, you got Sunrise Senior. I believe that was a merger or buyout here this morning. SRZ is the ticker symbol. They just signed an agreement to be acquired by who is this? Healthcare, a healthcare REIT. So up nicely, up 59% right now. You got Williams and Sonoma. You know, folks, have you ever been to Roy's restaurant? You know, we talk about Hawaii, and actually they got Roy's now, in many of the major cities across the country. Absolutely fabulous restaurant. Now, the ones that they have in some of the other cities here are not as good as the original one in Honolulu or even the one over in Maui. So if you haven't had a chance to go to Roy's and you have an opportunity, even the ones here that are local still are good. I suggest that you go there. But now, if you're a person that loves chocolate, then what you have to have is you got to get one of Steve's chocolates. Not my chocolate souffle, but it is one of my favorite desserts out there. Unfortunately, there's a long list. That's why I'm juicing. And so if you want to have a great dessert out there, go get one of Roy's chocolate souffles. Now, you say you don't have Roy's in your area? Go to Williams in Sonoma. If you go to Williams in Sonoma, they make a batch of stuff. You just take a little ice cream scoop, put it in a souffle bowl, stick it in the oven, and 20 minutes later, you've got a fantastic chocolate souffle out there. Now, be careful, because you can't, they're like Lay's potato chips. You can't just have one of those. But Williams in Sonoma, and I was digressing there, simply up $3 and change here, up 10% this morning. So we'll take a look at that. You got China Telecom, they're up $2 and change. That's up almost 5%. You've got and I don't know how to pronounce it. We're going to go with Qihoo. Qihoo. Happened to be reading a story about them yesterday. They apparently are eating Baidu's lunch over in China. Looks like it's a IPO not too long ago. That is up 13% this morning. So apparently I wasn't the only one reading that article on Bloomberg. Maybe it was elsewhere as well. You got China, as I said, China Telecom is up. eBay up $1.57. That's up 3% right now. You've got Keytronics, KTCC. They're up $1.66. That's up 20%. What's going on with Keytronics Corp here? Keytronics, what is going on there? They released numbers. They had operating income of $5 million versus $1.6. Net sales of $96 million versus $66. So Keytronics making a nice push and being paid for it here today. Discover Financial Services up 3%. Dropping to the downside, you got Apple leading the charge off dollar-wise, down $5 and change. That's 0.75%. F5 Networks right behind them, down $3. That's off about 3%. Baidu down 2.5%. Covidien, COV, off about 3% right now. Joy Global, JOY, down 2.3%. Express Scripts down 6% this morning. That's off $1.15. Caterpillar, CAT, they're off 1%. Get our call number 877-927-6648. And what is it all about, folks? Yesterday we were taking a look at the euro. We're taking a look at the 30-minute chart out here. I think it was yesterday. And what I had drawn in, I didn't go far enough back on the screen. I was drawing in this blue butterfly pattern, this 1.618 butterfly pattern. Of course, when I got off the air, and I was just simply taking a look at the markets, and because it really is all about understanding currency. You don't have to trade currencies, but you certainly want to understand what patterns are going on in the currency marketplace, because they are what are control. They control the world. The currencies control the world out here, and you want to understand the correlations between currencies and the markets. Now, yesterday, that correlation kind of came off kilter, totally came off kilter. You had the euro moving higher, and you had our markets moving lower. It has not typically worked like that. So we have a day, we want to pay attention to that. Why? Because if you ask me which one is stronger, which one's going to win in the end, it's going to be currency. It's always going to be currency. Fiat or otherwise, it's going to be currency that is going to win in the end. Well, when I did go back and take a look at what was going on with the euro, what I also saw was making a 1.272. Now, it was really did 1.20, but folks, that's close enough for my line of work here. So it was making the larger butterfly. That is the yellow one that is out there. And so that's the one that we're going to pay attention to here. I'm going to see if I can actually get rid of the blue out here. So you've got two butterfly patterns, or two expansions, if you will, of swing points. Now let's see if I can get rid of, let me punch on the chart here. Let's see if I have the ability to get rid of the, I think that's the first one right there. No, I was wrong. Anyways, I'll draw that in afterwards. But actually, let's clear the chart here. Once you have a butterfly pattern, now the key is where can it pull back to? And where it can pull back to is the low. So we're just going to simply draw a retracement tool. We're going to go from the low out here on the 30-minute chart, came in at 10 o'clock in the morning, August 10th, all the way up to the highs that were put in. That was being put in at what time? 11 o'clock in the morning yesterday. So now the euro's got just a normal dead cat bounce here in the euro would pull back into the 1.238 level. And 1.238 should go ahead and put some energy in the markets to pull back here. Of course, if that is all that the euro does, is only pulls back to that 0.382 level, that sets up another huge leg, another A to B equals CD leg up there. That, folks, is what could take the markets. That's the only thing, in my opinion, that'll take the markets over those resistance levels, and that is the euro making a charge. People going long and strong on the euro. Now, what I'm going to also do here is I'm going to take a retracement level from really the last leg up. So we're going to go from the smallest leg, and that would be starting here at about the lows that came in at 9:30 on August 20th to that same high up here. Now go ahead and I'll change colors. I'll make that black line here, and that black line shows you that the 0.382 level just of that last leg is 1.24085, right around there. That is at least where the euro ought to move to. Let's go to Rich in Orlando. Rich, thanks for calling. Thanks for holding.
Sure. Good morning, Steve. How are you?
I'm doing great. Yourself?
Pretty decent.
Good.
Yep.
Good. What did you want to look at this morning?
The TWM.
Okay.
We spoke about this a couple days ago, and it looked like it was a decent trade, and then it did get soft, and it seemed like it tried the bottom. But even there was a fair amount of volume yesterday in trying that bottom. And just a question as to what's your perspective on where we're at here?
Well, so when I take a look at trading either the TWM or the TZA, what I really do is just simply focus on the actual IWM chart. I think that's where you're going to get your best information from. To the extent that you're sitting trading in front of you, even if you're taking a look at entering trades or what have you, if you've got the ability to trigger trades, trigger stops and so forth, I would trigger everything off of the IWM. Okay, that would be the best thing. So we take a look at the IWM. What that was, and I'll go switch over to the TWM. But where you want to really be paying attention to volumes, triggers to either exit or enter a trade should really be on the IWM, because that's the underlying instrument. Or go to the Russell 2000 or go to the Russell 2000 futures contracts. But just staying inside the TZA or the TWM. Because those are doubles and triples, aren't going to. Sometimes you're going to get. You're either going to get stopped out when really you still should be in the trade, because of what's going on in the IWM.
Okay.
So So first, I just want to throw that out there. So when we take a look at the IWM, you know, what that did yesterday is it got up and over the July 5th high. It got well into the May 1st level and then just simply sold off like the rest of the market. Now, the Russell 2000 did not give us any kind of bearish candle signal. Not that wasn't a little bit bearish, but it didn't give us a named bearish candle out there. What the IWM is doing, what do we want to see? You're in the TWM. What you want to see today on the IWM is you want to see a close below yesterday's close. It's as simple as that. And that close there was 81.48. Because what we want is we want simply confirmation on all of these moves in the market out here. Right now, what the IWM is doing, just simply, toying with that May 1st area. The low is 81.29. It's traded at 81.25 this morning. And so for your TWM trade, if you see a lower close in the IWM today, that's a very positive sign that you'll continue to see a pullback. Now, where this should pull back to if the markets are going to move down, this should pull back at least into the next swing point, which would be down at your August 2nd area. That is in the range of 77.31, 76.25. Now, I'll go ahead and we'll try to correlate that to the actual TWM since that is the trade that you're in. And as we take a look at the TWM, that sets up that what you want to see is you want to see it close higher today. So you want to see it close above yesterday's close at 28.65. You're at 28.80 right now. And where this ought to trade to, where it's going to release information to you, is at that August 2nd area if it continues to move up. So that's going to be somewhere between 31.96 to 32.85. And what you're going to want to see in benchmarking it is you're going to want to see it moving into that area with more than 2 million shares out there.
Okay.
Okay, so your stop is real clear. You just simply tuck your stop somewhere behind yesterday's low, and that's where your stop ought to be.
I was at 27.50 was where my stop was at, but so you move it up a little bit?
27.50 because the low is 27.79. 27.50 is great. Okay. In case the market were to go down there and take it out. Now you get a close below 27.79. That it doesn't, and your stop doesn't get hit. I'd close out the trade.
Okay.
Okay.
Super. Thank you so much.
Hey, you bet. You bet. Thanks for calling. 877-927-6648. Let's go take a look at some of these stocks here that are moving since we were talking about Williams and Sonoma, and we were talking about dessert. WSM is the ticker symbol out there. That is gapping up today and looks like gapping up with some nice volume behind the move here. Again, Williams and Sonoma up about 9% right now. Did we take a look at what was moving that? Did we talk about the revenue here? If we did, I'll apologize. But their net income, $43 million versus $39 million. They must have really good guidance because their net revenue, $874 versus $814. And let me just refresh this chart here, make sure I'm looking at some good live data. This thing really off of the lows out here. Wow, look at this thing. This thing is, okay, so it's coming down into an area where it started moving down all the way back in the May of 2011 time frame. But if we take a look at today's volume, has done 2 million shares. It's up over, it was consolidating in a sideways range. That consolidation area really going back to October 2011. The low of that consolidation range coming in the area of about $33 and change. The high of that consolidation range, excuse me, being the May 3rd high, 40.76. That's got 2.8 million shares. So that is being taken out with volume. That is really your B point of an A to B equals CD up on the daily chart. So let's go take a look at that A to B equals CD up. That is going to be the lows down here from August 22nd, 2011 at 29.07. That's your A point. Your B point happens to be the high at $40.76. Your C point now happens to be the June 28th low, 32.67. You're up and over that B point with volume. The one-to-one takes you to 45.47. What does that do? That sets up going all the way back to the May 2011 highs. That area is May 2011 high exactly is $45.48. So you got 45. How does that work? Let me make sure. Look at that. 45.48 is your May 11th swing point high, and 45.47 is the actual A to B equals CD on the way up. Now, If we take a look at that retracement there, we'll go from the A to the B point here, see how far that retraced, and it came back. Oh, so how does that work? Okay, well, I know how it works, folks. That's why I want to make sure that what you have on your charting tools are your retracement levels. So the retracement level, 3284, would be a 618 retracement of that A to B move. The actual low that was put in, our C point here on June 28th, 3267. 3267 versus 3284. You gotta love it, folks. That's why you want to understand not just your AB equals CD patterns out there, but you want to make sure that you have your retracement level. And then all that's left is Rhodes, Zeta, Stone teaching you about the candles out there. So that is on Williams and Sonoma. Let's go put this thing back here on a weekly chart and see what this is doing out here. So Williams and Sonoma trying to take out its high. So, it should find some area of resistance as it completes that A to B equals CD, as it gets up into that area. So that's on Williams and Sonoma. Those highs, folks, go all the way back in Williams and Sonoma, back into the 2006 time frame, 2005, as well as July 2005. So you got a pretty decent area of resistance up here. It takes those out, and Williams and Sonoma is off to the races, especially if it does it with volume. Why? Because take a look at that possible on the weekly chart A to B leg. The A point, folks, starts out at a low of $4.35. In fact, let's just simply go for the heck of it. Let's go take a look at that A to B equals CD. So your A point was all the way down there. Your B point is a swing point that it's going to try to attack soon, May 20th, 2011. And the low coming in again in August. So your 1-to-1 A to B equals CD, we can see that is probably only a 0.382 retracement. We'll just go ahead and measure it to begin with. $69.51 if you can take out its highs. So on the weekly chart, let's take a look at Williams and Sonoma here. And we thought that Apple had a nice move. Williams and Sonoma off the lows from November 21st, 2008, $4.35. This, too, also being a little rocket ship. The retracement on the weekly chart, folks, only a 0.382 retracement. What are they doing right out there? Must be selling a lot of that Roy's chocolate soufflés out there. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Got the Dow off 3 points. S&P's flat, down 86 pennies. Composite off 2. Small caps down 1. Expect the markets to be relatively calm up until about the 2:15 time frame when the FOMC releases their minutes out there. Right now, we're taking a look at Dell. As we take a look at Dell certainly a struggling stock chart as you take a look at it. Now, Dell, folks, the made a high on February 21st, out with about 31 million shares. That high was $18.36, and boom, the next trading session, Dell gaps down with 51 million shares. That was your first message to get out of the stock, gapping down like that. What does Dell try to do? Tries to close the gap, can't even get up there. Moves up into February 29th into a high of about 1770. And don't folks wish they had got that first memo to go ahead and lighten up on Dell? Well, if they didn't, then they got the second memo came on the day after, May 22nd. May 22nd, Dell closes out at $15.08, and those shareholders still in Dell got the memo that morning because you had a wide price spread, a huge gap as it moved down into the $12 range. Did that with 109 million shares. That was at $12. Right now, you're trading at $11.53. Gaps down again this morning. I believe they beat their numbers, but their forecast here, they're getting their lunch eaten by all of these mobile devices. All of you folks that are using these different pads out there, Galaxy pads, iPads, you name it. And so now when it comes to the computer side of their business, or on the pad side of their business, I don't believe Dell is really in that marketplace. Right now, gap down this morning, 13 million shares in the first 26 minutes of trading. Dell now going after its swing point from just a couple of weeks ago, August the 2nd. That low is 1139. Only has 17 million shares there, and you've done today already 13 million shares. So that low is absolutely going to be tested. Looks like Dell, if we just put this thing on a weekly chart, wants to get back to its lows here. So once it breaks out the low, and what I'm looking at, folks, is August 27, 2010, $11.34. That will send Dell all the way down to the lows that go back to February of 2009, out in the $7.84 area. Ooh, that's a little stinger out there. Let's go take a look at Let's go take a look at what else is. Let's go take a look at Apple. So Apple yesterday setting up that Tiger Gartley, doing it while we were on the air at the Open. It was a beautiful Tiger Gartley pattern out there. Let's go take a look at the 5-minute chart here on Apple, see what it is doing here this morning. It is trading down. Apple's down about $3 and change, so no big deal there. If we take a look at as it opened up this morning at 9:35, not anything really significant. 862,000 shares to the downside, then 600,000, 1 million shares at the 9:45 time frame. And then it made a little bullish engulfing candle. This is just simply the 5-minute chart out here. That is on Apple. If we go take a look at what just jumped in first place on the way down dollar-wise, not a big deal, but Equix, EQUIX, they're trading down $4. I see that we're just about out of time, so folks, stay tuned. Following this show, you got the Money Master Show, Tom and I together. Then we go up to wherever Basil is on vacation today, I believe, from 11 to 12. Go to Tucson, Arizona from 12 to 1 for Larry Pesavento, 1 to 2 for the Daryl Martin Show, 2 to 3 David White, 3 to 4 Ken Shreve, back here for the Tom O'Brien Show from 4 to 6. Thanks so much for joining me here today, folks. Have a fantastic Wednesday. See you in a few, or see you tomorrow morning at 9 o'clock. Take care. Bye-bye now.